Hello nieces, hello nephews, it's your Uncle Charles here and welcome back to my YouTube channel where we do unbiased technical analysis. And guys, Uncle talked about briefly yesterday about CPI. And even though we mostly trade based on technical analysis, it's important we do some fundamental analysis as well, right? And it's important that we pay attention to data days such as CPI and FOMC because they can serve as strong catalysts to give us those one directional moves that we love to trade so much. Okay? How do you interpret those? Well, you look at what the forecast is, and usually if it comes out worse than expected, that's usually bad for the market. Okay, if it comes better than expected, that's usually good for the market, even though the data might still be crap. But because it's not as bad or it's not as good, the market interprets it how it interprets it. And as you can see today, CPI data numbers came out worse than expected. All right, it was 8.3. I think the forecast was around 8.1. And as you can see, the market did not like it. It sucked a little bit because this big old move happened right around 8:30, right? Pre-market. You know, if you're an option trader, we didn't get to trade this. If you did swing some puts from the day before, congratulations, man or woman. That's flipping awesome. Okay. But I'm a day trader, so I don't really swing. So I definitely missed out on those moves. However, got very lucky at market open. Okay. Because it was very tricky. After you see a big move down like that, what do? Because if you try to catch puts, it's like enter puts, it's like catching FOMO. If you try to, go long or buy calls, it's like catching a falling knife. So what do? Very important that no matter where the SPY opens at market open, we have to identify the support and resistance levels. Okay? And doing so really helped Uncle Charles out big time. Okay? Because the market opened today at 41.83. And it back tested the 50-day moving average as a resistance. Okay, this morning 50-day moving average around 403. Okay, and it's currently around 403 right now. So we saw that. I saw that at least. I saw strong buying pressure from that level. All right, you can see it right here. Got a nice strong wick, and it never tested again. I saw that. Was lucky enough to enter puts. Why? Because of the back test and go strategy. We lost a resistant level. I want to see the resistant level get treated like. We lost a support level. Excuse me. I want to see that that level get treated like a resistance. So when I say support level, we got below the 50-day moving average. We lost 407. We lost 405. I mentioned yesterday below 405. That is false breakout scenario based on this trend line. So seeing those levels lost, I was already bear biased. I saw. We got the back test of the 50-day moving average. That was the first resistance. We always got to identify where it opens, where SPY opens. We got to identify where the first resistance and support levels are relative to where it opens. Got that strong rejection from the 50-day and just a waterfall for the rest of the day. Look at that. Especially towards the end of the day. It was just a beautiful, beautiful trading day today. And I seriously hope a lot of you guys listening and watching this, I hope you guys were green today. All right. So you see this structure, this yellow line trend line here, yellow trend line here, right? Now the triangle pattern, pennants, whatever you want to call it. So back on September 6th, we got liquidity grab. Remember I made a video talking about area of liquidity. Definitely check that out. There's a link of it in the description below. But talked about the area of liquidity, how the stop losses could be building up under these, support and resistance levels. We saw here early September liquidity grab. Yesterday, we gapped up and got this breakout of this trend line right here. Definitely a liquidity grab, in my opinion. Because based on this trend line, this multi-month trend line, there was a bunch of money, stop losses, people who shortened from this trend line because they were trained pretty much since August. You can see on this trend line that short from this trend line could possibly see more downside, and we gapped above it yesterday, giving people the impression to be bullish. Very nice. We see that in hindsight now, right? But it looked like a liquidity grab with this drop now. So what do we do? What are we thinking? Well, we see since August 16th that we are in a downtrend. And there's the old saying that the trend is your friend, but there's also a new saying, uncle is your family. Okay? I'm thinking, and I could be wrong, I mean, it is a downtrend. We got lower lows, lower highs, lower lows, lower highs. Is it possible we are on track for the next leg down for that next lower low? Okay? That's what I'm paying attention to, because a critical level we lost besides the 50-day moving average was 397. That's the 50% retracement level. So here's the bull case scenario. I will, look for calls if this 397 level can get recaptured. All right? With 398.6 in play, possibly up to 402.5 to 403 level. That's around the 50-day moving average. Then 405 and 407. Those were the other fib levels that I have. But as long as we are below 397, I am favoring more downside. Okay, and I want to, I mentioned the AOL, how market makers did some liquidity grabs. So I want to identify some potential AOLs for us. Okay. So I got one here. This is a peak low right there. Okay, that's around 388.4ish. So below there is possible. Okay, possible liquidity down there. Potential double bottom over here. Potential liquidity grab right there. All right, I add the dollar signs. Also, some liquidity. AOL possibly down here just below around 371.3ish. Okay, so we know that there is a bunch of liquidity down there for the market to grab. Now, are there liquidity AOL zones up above? Of course. All right, but combining with a little fundamental analysis, which is pretty bearish right now, market makers might want to push downwards and go grab these liquidities. Combine that with the fact that we are in a downtrend. Okay, so I'm gonna go back real quick, get all my lines back. Now keep in mind, guys, I am an unbiased technical analysis trader. I followed the price action. The critical level we lost today was 397. If that level is recaptured, that's my fib levels, I'm gonna look for calls. All right, as long as below, I'm still bear bias and I'm favoring more downside. Okay, so next support is at 390. We talked about 390 before. This is the 23.6 retracement level from January high down to June low. If that level was lost, that's a very big level that the bottom is not in. We talked about this in a previous video, because in almost every downtrend, correction, bear market, whatever, one of the first things that the market did to put a bottom in was clear the 23.6 retracement level of that downtrend, of the overall downtrend. Okay, so if the 23.6 retracement level was lost at 390, that's a sign that this downtrend is not over. Keep in mind, Uncle was never in favor of the bottom being in. Why? Because we never recaptured the 200-day moving average. Talked about that in a previous video. As long as we are below the 200-day moving average, I am bear bias, medium term. Okay, and right now we got a downtrend. I'm favoring a lower low. Okay. So even in the short term, I am bear bias as well. I will admit that. However, I will follow the price action. If we can recapture some critical levels, right? SPY is around 393 right now. I have a level around 395. And like I said, 397. If we recapture those levels, then maybe I'll play it level to level, enter some calls, play to the next level. All right? As of right now, I'm favoring. As long as we're below 395, 397, we could possibly go test 390, which is much weaker. Got a level around 388.76. Okay. There is a fib level around 380 as well, which is around where I mentioned is possible AOL zone. Okay. So guys, bottom line, Uncle is bear bias right now. Okay. Follow the trend. Triple Q, you can see here since August 16th, bear bias. Why? Because it's a bearish trend. Lower low, lower high, lower low, lower high. liquidity grab yesterday. Let's see if we can grab some more liquidity from the downside and continue this downtrend. The trend is your friend. Okay? Big thing to note, it lost the 294 level. That's a 61.8 retracement level from June low up to August high. So as long as we're below 294, I am bearish and favoring more downside. If we can recapture 294, maybe we can go test some resistant levels. All right, 296.7 is 299 up to 300 is. Okay, that's a 23.6 retracement level of this downtrend from August high down to so far early September. Okay, but bottom line, as long as we're below 294, I'm favoring more downside, targeting 290.5-ish, 287-ish, 286.5-ish, maybe down to 283. That's the 78.6 retracement level. Okay, guys, so below 294, bearish. Above 294, recapture that. Maybe we can play a false breakdown setup. All right. Tesla, we recaptured this yellow trend line back on September 9th. Showed some follow through yesterday. But today we gapped below it, and look what happened. Back tested that level as a resistance. Found strong selling pressure, and we closed below the 200-day moving average. That is a false breakout scenario. Okay? We recaptured that 200-day moving average September 9th, looking bullish, but lost it again. Therefore, as long as we are below 294.6s, that's around the 200-day moving average. It could change by tomorrow, but as long as we're below, I'm favoring more downside. Next support's at around 290. If that fails, we can go down test 286.3-ish, 283.6s, and possibly go down test the 50-day moving average, which is around 277, 278 zone. Okay, guys, I'm only bullish if Tesla can recapture that 200-day moving average around 294.6s. I have a resistance level around 296. Okay, let's recapture some critical levels before we try to say Tesla is bullish, because right now I'm seeing some bearish price action, at least in the short term. Okay, let's check the option flow. This is SPY, extremely bearish, 96% in the puts. Okay, this is filtered for 500k premiums or above. Right, they are betting to the downside. Look at these big size ones, over 10,000, over 8,000, millions of dollars worth pushing to the downside. October 21st, 2022 is expiration date, so they got time, but they are very, very bearish. 376 strike price. Let's move to triple Q, 81%, very, very bearish, guys, very bearish. And Tesla's actually bearish today, 70%. All right, this one, look at that, 9 million premium, over 8,000 in size, 250. Interesting. So they're very bearish. That's another $40 drop, but the date's on November 18th, so they got time. So big money's bearish on it, guys. So guys, I hope you guys found this video helpful. If you guys want to join the profitable trading community, please consider joining Uncle Charters' Discord. I greatly appreciate it. Join the family. Other than that, thank you guys for watching. Peace.